Hello traders, welcome to Investoo.com's flash course on how to correctly calculate your targets. In this lesson, we are going to learn how to position your targets using market structure. And right here, we have a short position on the pound dollar. As you can see, we took the short position when we break with this low. Now, where are our targets going to be? Remember that for your system to be actually profitable in the long term, you have to choose at least a one-to-one risk to reward scenario. And if you don't have a one-to-one or at least a one-to-one risk to reward scenario, where you should not be taking that trade. In this case, we are risking 65 pips. Okay, so the least amount of pips that our target should yield is 65. Now, when we talk about market structure, we are talking about previous zones of supply or demand or support or resistance. When we talk about these zones, when we look at these zones, what we need to look at is the areas where price has tested or where price has churned. This means that we are not going to look at the areas where volatility was high, which means that there was no actual volume in this, but we are going to look at the areas where price tried to break through or tested after a break where volume did happen. Okay, so we are going to look at this zone right here. All right, this is the first area that we need to look at on the GBP USD. Now, to target this, if we were targeting this area, we would yield 65 pips even, which means that we would have a one-to-one risk to reward scenario, which means that we could have put our targets. Well, I'm not going to put it there because this is a much longer term trade, but I mean, if we put our targets right here, we would have been taken out on a 65 pip win. Now, let's say that we are looking at the 4-hour chart, okay? On the 4-hour chart, you need to look at the zone which price has tested before, breaking and retested again. And yes, the zones are going to be a little larger, but you always need to put your stop or your targets a few pips above that zone because what you really want to do is get filled on those trades. And basically, this is how you're going to use market structure to position your stop losses. I'm sorry, your targets. And it's pretty simple. If you don't use market structure to position your targets, well, you are going to get very confused on how on or why price is actually reacting to a level. For example, right here, we are in the 4-hour chart, but you can see, let me just zoom in this for you guys. You can see that price has, well, we have found buyers at these levels. And if we go back to the hourly chart, you can see why. Because we have hit the first short targets, okay? And the first short targets were right here at this churn area, okay, where price tested, rejected, then broke through, retested as support, and then broke above, okay. This is a very important zone of the GBP USD, and it's a zone that we must consider if we were actually trading the short term on the pound dollar. But because we took this trade on the 4-hour chart, what we are going to do here is we are just moving our stops to break even to protect ourselves and to have a risk-free trade. And we are going to wait to see what happens here if we break above or below. If we don't break above, we don't break below the first zone or the first structure, support structure, then we are going to get stopped out at break even. But if we break with this first structure, then we are aiming at our real targets for a nice 180 pip profit.